Hello, this is Jordan. This video is being recorded on Friday, December 9th, 2022. Thank you so much for joining me today. In this video, I'm going to discuss actually only one ratio, but we're looking at or thinking about precious metals ratios and how precious metals are performing against the S&P 500. And of course, with gold being the most important in the precious metals universe, gold against the S&P 500 is such an important relationship and ratio. And gosh, I've done so many videos on this over the years. And if we're looking at gold against the S&P 500, we have this is a weekly line chart. We have a moving average there, which is equivalent to the 400-day. The RC is when rate cuts started. The vertical lines, the light black vertical lines there, show when the S&P 500 there at the bottom was in the process of breaking below its 40-month moving average. I've also talked about that in other videos and why that's significant. It's significant because when the S&P loses the 40-month moving average, especially after years and years of trending higher, it's a powerful signal that a new secular bear market has started. And if we're looking at the S&P 500 in recent months, it did trade below it, yet it put in a bottom, traded as low as 3,500. It's had a bear market rally. Who knows if that's already fizzled out, or maybe it can go sideways for a little while. But I put a vertical black line there because the market could be in the process of losing that moving average. And you can see what happened back in early 2001. The S&P traded below it, rallied back up above it, and then boom, that was it. 2008, the market traded below it for a little while, rallied back above it, and then fell below it. So I'm highlighting the process of the S&P losing that 40-month moving average. It's not instantaneous. There's always a little process there, and so we could be in that process. So if the S&P 500 were to trade lower, back down to 3,500 and lose that moving average again, I would put another vertical line there to signal that, yes, it's officially lost the moving average. And, why is that significant? If we go back, look at early 2001, when that happened, actually, I believe the Fed cut rates at the beginning of 2001. So the Fed cut rates before that happened. RC is there. And then immediately after that, the gold against the S&P 500 ratio really gained bullish traction there, you can see. So it doesn't always happen perfectly in every example, but this is generally what you see when you're starting a secular bear market. You see gold against the S&P 500, it starts to base, it starts to bottom, and then it tends to gain quite a bit of traction around the time the S&P loses the 40-month moving average. And that also tends to be the time when the Fed starts cutting rates. So that's why I'm so bullish on what is coming over the next decade for precious metals. It's the difference between now compared to 2016 and 2018. At those periods, like in the mid to late 1960s, the S&P was not in a secular bear market yet. So that limited the upside performance of precious metals. Now, with the S&P 500 likely going into a secular bear market, that's going to give precious metals significant upside over the coming years, in the coming decade. It's not just going to be a huge move for 6 months and then fizzle out. And so where we are here and now, you can look at gold against the S&P 500 there, the yellow circle. That ratio has been holding above the 400-day moving average, the 82-week moving average, since August, I believe. So it rallied once, it came back, tested the moving average, and now it's rallying again. And we're just waiting for this ratio to, it's at 0.46. It would be lovely for us precious metals bulls to see this thing surge above 0.5, or even in the very short term, turn up to 0.5. And with respect to the yield curve, that's the 10-year and the 3-month spread. You can see there, obviously, the curve is deep in the red. That will start steepening when the Fed stops its rate hikes, and that's also going to be an indication that the Fed's eventually going to cut sooner rather than later. And so that typically, that's going to be a major catalyst, in my opinion, for precious metals. But we're not quite there yet. I mean, that could be coming in the next 2, 3, 4, 5 months, something like that. And, the big difference with the stock market is, unlike 2016 or 2018, the Fed is going to have to ease policy, presumably, because the economy is getting worse. The stock market's rolling over. It's threatening a new low. And so when you're in a secular bear market, and you have a significant recession, in a major downturn in the economy, in the market, the Fed's easing policy because of that. It's completely different than a 2016 or 2018 or a soft landing situation. When they're easing into a soft landing, it's like 2016 or 2018. Everything turns up, but the stock market, being in a secular bull, will eventually outperform precious metals. That's what happened in 2016, 2018, and even in 2018 or 2020 for a brief period, during the COVID crash. So yes, this is looking to be a much different point in time. Because the market turning lower, the economy threatening a recession, that is going to force easier policy out of the Fed, and that's when we could see the real divergence between precious metals and the stock market. So again, we're not quite there yet, but nevertheless, it's good to see gold against the S&P 500 holding above that ratio. The support's at 0.3. Again, the ratio has bounced above it. It's at 0.46. And I just think we're going to have to be a little patient here. It's going to depend on the stock market. And, if we see this rally really roll over quickly, or if it takes a couple months, that's what it's going to depend on, the performance of the gold against the S&P 500 ratio. So that's all for this video. Long story short, gold against the S&P 500, it's looking really good. And, when we get that next key move in the ratio, when it makes a higher high above 0.5, that could be a real signal that we're going to see the next leg higher in this fledgling bull market in precious metals. Thanks so much, guys, for tuning in. Let me know what you think in the comments, and I'll talk to you again in the next video.